Hi everyone, Kurt Grogan here from TipHaus, COO and co-founder over here. Gonna cover a little bit about the One Big Beautiful Bill, particularly the no tax on tips section, as this is something that has been misunderstood, mischaracterized, polarized, not a lot of great resources and understanding out there, and we're getting tons of questions from operators and employees alike. So I wanna make sure that we cover a few of the basics, what to know, what not to do, etc. here. So first things first, what we deem the service charge trap. This is something that will catch a lot of groups off guard if you're not thinking about it or paying attention to it. There has been a large industry shift, and we see more and more restaurants that are using service charges. These are not eligible for the tax deduction. A very important piece is that the up to $25,000 that they are able to deduct from their taxes on tips must be a voluntary tip. So if you have a service charge and there's an additional tip left on that check, that additional portion is eligible for no tax on tips. Important to know that this is up to $25,000. It must be a role that customarily receives tips prior to January 1st, 2025. But again, we want to pay strict attention to the idea that these have to be voluntary tips to be tax deductible. Next is the payroll reporting for the overtime portion, or the premium overtime portion is the most important part. So typically overtime is going to be paid at something like 1.5. The lack of taxation is only on that half. That is the only portion you get to deduct from it. And this is half of the amount that they're eligible for deducting on tips. So tips is up to $25,000. The overtime deduction is up to $12,500. Very, very important though. I see a lot of confusion around this, that it is not that full time and a half. It is just the premium portion of that, or the half that is added to it. Couple other elements that we want to make sure you're aware of and that you should get ahead of with your employees. FICA. FICA is not free. This is Medicare and Social Security. Both of these are still going to be taxed. So important to know that you'll have employees say, hey, I thought I wouldn't ever get taxed on tips again. What's going on? What's happening here? Make sure you get ahead of that. It's just federal taxes. State taxes can still apply, although many states are trying to follow the no tax on tips policy. Those will continue to roll out through 2026, and we will see some challenges. I'm certain of it. But for now, being mindful that FICA is certainly going to still be taxed. Those taxes are going to be deducted. Make sure you get ahead of those conversations, because there will be a ton of confusion from employees as to why any portion of taxes are coming out of their tips. And last but not least, not as relevant from a TipHaus perspective, we don't deal with depreciation, of course. However, very important from a restaurant operator perspective. One of the big pieces that OBBBA has restored is the 100% bonus depreciation for qualifying assets. So it is worth taking a glance at your capital expenditures for 2025, seeing, did you upgrade point of sales and the hardware? Did you put in new kitchen equipment? All of these items may be eligible to be 100% instead of having to amortize it over the following years. So could save you a lot of money and put some money back in your pocket this year. I know industry is a wild time to be in the hospitality industry right now. Wage pressure, gig economy, turnover rates, food cost, all of these items going on. Find some money where you can and be mindful of these items. Next, I want to give a quick pay attention to the employee side of things. While, I presume you're most likely an owner or operator listening to this, it is very worthwhile to be knowledgeable about it, to be able to answer those employees' questions, to make sure that they are taking care of themselves. As always, if your employees feel taken care of, they feel transparent, they feel like they're in a great place, they're likely to stay longer, and we can increase that employee tenure. First and foremost, 2025 is a unique year as it got passed. So no tax on tips applies from January 1st of 2025, obviously to December 31st. As we go through that, they're going to be doing a one-time filing on their annual taxes, and that's where it's going to be deducted from. 2026 and beyond, it will be on every pay period. So every 2 weeks, every week, every semi-month, whatever your pay period that you calculate through it is, but it will be happening ongoing as opposed to kind of a deduction at the very end of the year. However, for 2025, they do have to deduct it on their federal filings at the end of the year. Probably in April is when they'll be looking. With this, first place they should be looking is their W-2, and you should be chatting with your payroll providers. Reviewing box 1 is going to be the most important piece to start with. And then often what we are seeing payroll companies do, or the payroll manager at restaurants, depending on how you're structured, is box 14 other is going to be used for things that could say qualified tips, qualified overtime, OBBBA tips. I've seen that already. But It's important to note that box 14 is where they're going to want to look if you have set it up accordingly. If it's not, if it's all lumped together, traditionally tips are treated as wages, right? Even though there's a distinction, tips and wages are just viewed as your total gross income. This is that major separation point where now tips and wages are going to be treated differently from a tax perspective. So you want to make sure you're setting your employees up for success. If they are missing that box 14, if they don't have it, you're going to want to work with them. They can do it. They can pull it from their pay stubs. They may have their own records of this. They may be able to go through and you work with them on the point of sale side of things. Or of course, if you're a TipHaus customer, they all have free access to the TipHaus mobile employee app where we display those tips for them. Similarly, we break down service charges and everything else to make it easy for them within that and from a manager perspective as well. Make sure that they have access to those 2025 tip records. Again, if they're missing, they want to pull those in. They want to make sure they're excluding service charges and autograts. But these records are going to help make sure that their tip deduction is valid and able to be reduced. The calculating the overtime premium, just a reminder, again, it is just that premium portion, and that's going to be capped at $12,500. But both of those deductions, if they're filing through the IRS is free or TurboTax, whatever it might be, there will be dedicated sections now for these individual items. TurboTax and Intuit have already put out resources on their website of what it's actually going to look like when they are filing. And then lastly, of course, is to enter it however you file your annual taxes. Follow those screens, chat with them as needed. Come and chat with us here at TipHaus. We're always happy to be a resource. And this is something, with hundreds of thousands of hospitality employees that rely on our system, we have lots of questions and therefore we have lots of answers around here for you. So with all of that being said, I do want to pay a quick attention to, again, 2026. Being mindful that things are going to be ideally much easier, but you are going to have to work with your payroll company to ensure this. The withholdings should occur automatically in 2026, 27, and 28. OBBBA has approval for 4 years, 25 being the first. So for the next 3 years, it is still approved and will go through. But you want to make sure that as a payroll provider and as the employer, that you are helping to set them up for success by entering the information into the right boxes. And as a friendly reminder, just something to chat with your employees about if it's questions or if you're going to have concerns over it. Most employees, if they're earning under $15,750 in total income, this doesn't apply to them. They're already not paying into taxes because they haven't hit that minimum threshold. This whole program starts to phase out over $150,000. Now you're a larger earner in a different tax bracket. There is no set tax on tips or wages. They are just viewed as the same previously. So anyone earning over $150,000 is going to see that adjusted and it's going to be starting to be reduced. Anyone between $15,000 and $150,000, that's where they're actually going to see the benefits of this no tax on tips. And friendly reminder, this does not apply to states. States can pass their own legislature. They are. This does not apply to FICA. So there will be taxes on that. It is specific to federal income tax. But all to be said, should be an exciting time. I'm really looking forward to seeing if this causes a return to the service industry, if we're able to see more employees leaving that gig economy and come back in as apples to apples, $50,000 in income there versus $50,000 in income at the restaurant that has tips. They will actually have a greater take home from the restaurant. So we will watch and observe together as always. Please engage with us here at TipHaus. We're always putting out resources to ensure that we're helping out our operators and employees. So happy to answer questions. Whether or not you're a customer, reach out to us. We'll happily engage with you. And if you are not a customer, we would love to chat with you. You feel free to scan here. There will be a link below as well, I'm certain. But you can come and get a risk-free demo. Check it out. See if this works for you. Makes the lives of your owners, your operators, your managers, your payroll team, and your employees function just a little bit smoother. And with that, I hope it all goes well for you. Please reach out if you have questions, but looking forward, and we will provide updates as more of these things become concrete and clear moving into 2026.